a wonderful Friday evening. So if you can hear me, just by show of hands, how many can actually hear me? Nisikuwe najiongelesha hapa peke yangu. Nice. Thank you. Thank you so much. Karibuni sana. Welcome to our webinar. And religiously, we have been going through a lot of sectors. Every month, every one Friday of the month, we have been covering taxation on different sectors. So for today, we decided to do hospitality and tourism sector. Yeah, we want to look at the hospitality industry and also touch on tourism. And we shall confine ourselves to exclusively taxation as far as those sectors are concerned. So you're much welcome. You can follow us on our TikTok and Twitter handles, and also follow our WhatsApp channel for continuous tax updates. We are here to go to people. And just for clarifications, we are not KRA. We are here to actually help you as far as KRA matters are concerned. So you can relax and be free to ask any questions, and we will answer you as according to the law and according to what KRA will require of you. Okay, so today I'd like us to, in the next 1 hour or so, I want us to look at different aspects of taxation as far as the hospitality industry and tourism is concerned. And one thing to note, for those of us who are owning hotels, ama tuko kwa the accommodation and the tourism sector, once your guest checks out, that is when the taxman checks in. So when he does do that, I don't know how ready you will be or how prepared you will be to actually accommodate you, and probably at the end of the day be smiling. Hopefully utakuwa unaenda kufunga biashara. So for today, I'd like us to look at different perspectives. We want today to move beyond basic tax filing and equip you with practical strategies for risk mitigation, cost management, and seamless compliance across your operations in matters tax. So in the recent past, especially the hospitality business, there has been an increased pressure driven by a lot of multi-agency compliance costs, statutory levies, and tightening regulatory oversight. You'll find that KRA are coming after you. The tourism ministry, as far as tourism levy is concerned, is coming after you. So if your books are not okay, you'll find yourself with a lot of problems. And as we have noticed in the current days, the tax compliance in the hospitality industry is no longer a simple month-end filing exercise. Currently, it involves a lot of management of multi-tax interactions. There are a lot of taxation perspectives where, if you're not careful, you will find yourself in problems with KRA, especially with the teams and automated systems. And also, there's a lot of visibility of the POS systems. So it poses a very big risk to the hospitality industry, matters concerning tax compliance. So the question is, why did we choose tourism and hospitality? Because number one, there's a very high economic impact, because as recent as 2025, tourism and hospitality generated around 500 billion in revenues, supporting over almost 2 million people jobs. So, of course, it will be an area of interest for the KRA. Also, there's been a lot of tight profit margins. There has been a lot of growing costs. Sometimes it is impossible to shift the burden of taxation to your customers because you're going to lose clients. So you'll find that your profit margins are growing tighter by day because there's a lot of multi-agency compliance cost, and also they've ever raising statutory levies. Another perspective is there's a lot of multitax reality, whereby there's been a lot of complex tax bases from booking rooms to food to beverage billing. So if you're not careful, you'll find yourself overtaxing yourself because there are a lot of bases in computation of those taxes. So this complexity has given a lot of people in this industry a lot of issues with KRA. So that is one of the reasons why we decided to deal with the tourism and the hospitality industry. Also, we have a lot of real-time regulatory oversight, especially e-teams, from how you're purchasing your products and you're giving out your PIN. So KRA already knows that you're doing purchases, to how you are selling it to customers. Nowadays, most customers, they are asking for e-teams receipts. So there's a lot of exposure, and it is very, very real time as far as this information is relayed to KRA. So you have to be on your toes. You have to be very careful to ensure that you're not found flat-footed when KRA comes knocking. So under the statutory legal framework, we have the TPA, which basically uh, advises on enforcement and procedures across all tax heads. We have the VAT, we have income tax, we have the Tourism Act, we have the excise duty. So those are some of the statutory and legal frameworks that affect this industry. We shall be looking at them one by one. We shall be looking at them. By the end of this webinar, we shall have covered a very big chunk of it. So in case of any queries, please feel free to look for us in our chat box. We shall be more than ready to answer your queries. I will answer some of the questions, and also my co-host will be helping us answer some of them. And we'd like to encourage you to ask those questions more and more, because as far as we know, ignorance of the law is no defense. And one of the reasons as to why we find ourselves with a lot of problems is because we make a lot of assumptions. And we find ourselves deciding to advise that is not backed by the law. So you end up just because probably someone advised you what career wants, or your accountant told you that they think that is how transactions are treated, then you end up making mistakes that will end up hurting your business. So what we always advise our clients is, if it is not backed by law, then treat it as a rumor. If it's not backed up by law, then treat it as a rumor and receive it with a pinch of salt. So the sector profiles, what we shall be looking at today, we shall look at hotels and lodges. So if you're in that industry, stay tuned. You're going to learn one thing or two. We'll be looking at restaurants and bars, because there's a lot of high M-Pesa and cash volumes. So it is definitely a point of interest for KRA. Also, we have service charge distribution and dynamics. For hotels and lodges, we have the high capital intensity. Although it is usually very capital intensive as far as construction is concerned. Also, there's a lot of complexity in the bundle sales. You'll find that there is a package that offers rooms and conferences, sometimes conferences and food, sometimes rooms, either full board, half board, or just a single meal. So there's a lot of complexity as far as hotels and lodges are concerned. We shall be looking at the tax treatment of them all. And then we have the tours and operators agencies. Sometimes the tours and operating agencies, there is usually a very big aspect of package bundling, whereby they say they'll offer transport, accommodation, and food for this particular number of days. Sometimes there's a lot of transfers to hotels. So we shall be looking at how the tax implications of those. Sometimes they offer international travels, which are definitely zero rated. So if your books are not okay, you will end up paying taxes 60% instead of actually claiming a refund of your inputs. So it is very important to, first of all, understand the nature of your business before you start paying the taxes. And also, as you shall see, there is no one single way of actually handling taxes as far as this industry is concerned. As we have looked, it has a lot of its own complexities. So it is supposed to be transaction-based rather than industry-based. So please stay tuned. We shall be covering them one by one. In case of anything, in case you've not had something that you wanted clarification on, then feel free to ask. The first tax that I want us to look at is the VAT. That is beyond the 16% headline. Currently, VAT has three implications. We have zero rated. As far as the standard rates are concerned, we have 16% for all vatable products. We have 8% for fuel, and as far as the second schedule of the VAT Act is concerned, the zero rated category. And of course, we have the first schedule, which basically talks about the exempt. So under 16% application, the 16% VAT triggers on all accommodation, on all foods, on all drinks, on all catering services, spaces for hire, laundry, and local transfers. For international transfers, it is zero rated. So remember that. So as per the law, the threshold for VAT is 16%. So, but sorry, it is 5 million. That is the threshold for registration of VAT. So if your transactions in a particular year, if the turnover exceeds 5 million, you are supposed to register for VAT. If it is lower, you can apply voluntarily for VAT, but most of the time it's not advisable. Just wait until you attain the 5 million threshold and then you register for VAT. Above that, of course, it will trigger, it is tax evasion, and of course it will trigger an audit from KRA, because with the current visibility of transactions, it is so easy to tell. And then we have exported service threshold. Tour operators package for non-residents tourists must strictly satisfy place of supply test. For you to qualify for a zero rating, you have to certify the place of supply. The place of supply should be outside Kenya. That is when you shall qualify for zero rating instead of 16%. But if it's within Kenya, then it is vatable and you're supposed to pay VAT on it. And then there's a lot of expert insight. So in hospitality, VAT is your biggest exposure. Exposure point, sorry. The carry audit will focus on the timing. I'll talk about the timing. It will talk about also the invoice generation and missing items links. So we have talked about timing. What is the time of supply, or rather, what is the tax point as far as VAT is concerned? I like us to be very careful on this, because we have seen a lot of cases whereby a lot of players in this industry unknowingly commit a lot of rather the operations are not based on the law. So for recognition for VAT purposes, VAT should be declared as per Section 12 of the VAT Act. It is determined by the earliest of the following. Number one, date on which the goods are delivered or services are performed. In this case, is the day that the people who have whom you are accommodating, when they come for those services, when they come and sleep, when they come to eat, the particular day when those goods and services or those services are delivered. That is one point. Number two, as far as this industry is concerned, is the date in which the invoice for the supply is issued. I hope that is clear. The date on which the invoice for the supply is issued. Number three, the date on which payment for the supply is received in whole or in part. So this is the biggest risk areas for this industry. A lot of lodges and hotels have advanced bookings where someone books and pays and probably say that I'll be there next month. And most of the cases, there are two instances. It's either the money is non-refundable or refundable. So you'll find that in most cases, companies will recognize this value, or rather this sale, when the person reports, which is actually not what the law says. The law says the earlier of the date of supply of those services, the date of invoice, or the date of payment. So if your client makes a payment, books in advance, that is the tax point. I hope I'm clear, especially for those whose policy says that it is non-refundable. When the customer makes a payment, you give a receipt, you give an item receipt at that particular time, and then you recognize that that supply as a sale. That will be your point of supply. For those of us who have a clause that the money is refundable, that does not mean that the law changes. Still recognize that sale upon payment. Then if the person cancels, give out a credit note on the sale. I hope I'm clear. If, let's say, for example, a person books, let's say they want to come to your hotel in October, and then they book it today. So when they book, they pay the money. When they pay the money, recognize it as a August sale. Ikifika October upate the person is canceling, provide a credit note. Because KRA usually will ask you if they're doing a reconciliation, a bank reconciliation, kuna pesa iliingia October. But kwa sales za October inamaanisha you underdeclared your sales because a lot of money came in, and then utasema no, these are customer deposits which are subject to refunds. Number one, deposits, they are still recognized as sale. Number two, what does the law say? The law says is the earlier of receipt of payment. So recognize that sale when you receive the money. Upon cancellation, upon refund, you give a credit note. I hope that is clear. We have seen a lot of companies fall into this ditch, and most of them, they do it out of ignorance, that they have not recognized that sale, but KRA recognizes that revenue the earlier of these three circumstances. I hope that is clear. Our advice on refunds beyond 6 months, because beyond 6 months, you cannot give a credit note. Beyond 6 months, you cannot actually give a credit note. Have a policy in your organization, a written policy, a proper document that says bookings beyond 6 months, only beyond 6 months, will be recognized as deferred income. That means that when, upon cancellation, because you cannot give a credit note after 6 months, upon cancellation, upon receipt of that service, that is when the sale will be recognized. But have it documented and have it very, very clear. But for all other instances, follow the law, Section 12 of the VAT Act. I hope that is clear. So even in the VAT Act, there are two aspects that are usually part of the VAT calculations. Number one, we have got the tourism levy. Number two, we have got the service charge. This has been a very big gray area as far as computation is concerned. But then again, we say that if it's not in the law, then treat it as a rumor. Tumetoka section 12 inaongelea terms of supply. I want us to look at section 13, part 7, that talks about both the tourism levy and the service charge. So the consideration for supply of accommodation for restaurant service shall not include, or rather shall exclude, the tourism levy imposed on the supply under the Tourism Act. So while calculating the base for VAT, you're not supposed to include tourism levy. Tourism levy is exempt from VAT. I hope that is clear. That means if your sale is 100 shillings, and your tourism levy is 2%, so that is 102. While calculating VAT, you shall not use the base of 102, you shall use the base excluding the service charge. I hope that is clear. Then number two, we have, the tourism levy. Then number two, as according to section 13.7 of the VAT Act, it says any service charge made in lieu of tips or gratuities shall be excluded. Hope that is clear. But there is a catch. Provided that the proceeds shall be distributed directly to the employees. If you'll find that in most organizations, ukipatiwa receipt, or ataandika hapo the service meal is 100 shillings, tourism levy is 2%, service charge will be 5%. That is excluding of VAT. So there are two instances. Hii service charge yenye una charge watu, you as the restaurant owner. Number one, it should not exceed 10% of the value. That means if the receipt is 100 shillings, if the service charge is more than 10 shillings, then it is vatable. But if it is less than 10 shillings, or rather 10% of the value of the receipt, then it is exempt from VAT. Number two, the service charge should be distributed directly to the employees. If you're charging 5% service charge, and then you retain 2%, and then unapatia employees 3%, then that is vatable. There has to be very, very proper documentation as far as service charge is concerned. Sorry about that. Failure to which it's going to be vatable. Number two, as we shall be looking, when you're talking, when you be looking at computation of pay, the service charge should be added to the salary so that it becomes the pay on it. Failure to which it shall not be excluded from VAT. So here's the key takeaway. The base amount, VAT applies only to the menu or the room price. The service charge, maximum 10%, excluded from VAT if it is 100% distributed to employees. The tourism levy, which is 2%, calculated on the base price plus the service charge, but excluded from VAT. So the 2% for tourism levy, utachukua the base price, uongeze service charge, calculate 2% yake, and then you remit it to the tourism levy. Just a point of concern, in the recent IAS Act year 2026, there has been an adjustment in the Tax Procedures Act. There has been an adjustment in the TPA. So section 39 of the TPA, the TPA is amended by inserting this new section. Notwithstanding the provisions of any other law, where the commissioner is the collector of fees, levies, or charge under any other written law, the commissioner may recover any unpaid amount of fees, levies, or charge as if it was an unpaid tax under law. So we know that KRA has been a collecting agent for these levies, for these fees, the housing levy, the NITA, the tourism levy. But in most cases, the standard levy. But in most cases, they have not been really following it up because they have just been collecting agents. But Section 39 ya TPA imeongezwa that part, that now KRA has the mandate to collect these levies as if they are taxes. So you already ushalipa VAT, so they know how much tourism levy are supposed to give. Ushalipa pay, wanajua the amount of housing levy are supposed to give, the amount of NITA. So you have to be very careful going forward. Ensure once you deduct the 2% from the housing levy, ensure that you submit it, because now it is under now again the jurisdiction of KRA to collect those amounts as if they are tax. So that means they can give you agency notices based on your failure to submit these levies. Yeah, we say that if it's not in the law, treat it as a rumor. That is why we are so careful are quoting the law where necessary. But then again, we're not saying this to frighten people. We are saying this so that you can get educated. Because we know that ignorance of the law has never been a defense. So we don't want you to be gotten flat-footed. And what we have here is just a basic calculation to avoid double taxation. We see that the correct calculation, unachukua the net base charge, and then you add the allowable service charge, which is less than 10%, and then you get subtotal A. 2% of that subtotal A, that is housing levy. For VAT, you just take the net base, multiply by 16%. For service charge, if it is 5%, take 5% of the base charge. I hope we are making sense. I really do. We're hoping I really do hope that we are we are making sense. So if I might, so I like to look at one or two questions. Someone has asked, are hospitality entities required to pay NITA levy as well, on top of the tourism levy? Yeah, the answer is yes. The answer is absolutely yes. NITA has got no, the NITA levy has got no, the fact that you are paying tourism levy does not exempt you from paying NITA. So someone is asking that he would like a direction about tour traveling company that serves non-residents. We shall be looking at those, even if case example, even if you are transferring them to a related party or to an international, to a subsidiary, to a parent company. We shall be looking at that. Some of the questions also my co-host will be helping me answer. So someone is asking, if a hotel charges 10% service fee but does not distribute 100% of it directly to employees, does the entire service charge become vatable or only the distributable portion? The answer is the whole amount becomes vatable, not even the part that you are retaining. The condition for an amount being exempt is if it is wholly distributed to the employees, but if not, it becomes vatable. Someone is asking about commissions. Yeah, we have a part on commissions, which is very important, which computes a very big role as far as this industry is concerned. We shall be looking at it in our later presentations. So for bars, restaurants, and catering services, let us look at that tax map. Number one, if there is in-house dining, the standard rate shall remain 16% on all restaurant bills, bar orders, and room service folios. For outside catering, these are purely service. These are supply of services, and still they are all vatable. E-teams invoicing at the point of dispatch. The only times that they're not going to be vatable is when you're supplying to bodies that are exempt under the first schedule of the VAT Act. Probably if you are supplying catering services to the KDF, then that's when they're going to be exempt. If you're producing, if you're providing catering services for outside the boundaries of Kenya, then it's zero rated. So it depends, but if it's in Kenya to local residents, then it's a supply that is purely vatable. For third-party delivery apps, orders processed through Glovo or Uber Eats, they still must transmit items receipts under the restaurant's primary KRA PIN, and they're still vatable. It does not change, both for the delivery services and for the delivery services and the hotel. Then you have got service charge exemption. We have said that it is only deductible if 100% is distributed to staff. So, and it has to reflect in the payroll. If in that particular month, under your service charge, the full amount of service charge was 500,000, it should be reflected on the payroll, not part of the basic salary, but an addition to the salaries of the employees. I hope that is clear. What about the input? Because the output. For VAT recovery, the input, we have high expenditure sector, especially when you're constructing, especially when you'll find that especially in these high-end industries, the furniture is very expensive. The linen, the fabrics of the linen is very expensive. You'll find that even the hardware, the ICT, there's a lot of complexity as far as installation of cameras and security systems. So if any of your inputs are vatable, then you can claim them under VAT. But however, these are the three non-negotiable pillars as far as input recovery is concerned. Number one, items validation. Supplier invoice must show valid items transmission on the KRA portal. Make sure that the person giving you that service akona items, na your items ikona VAT. That is the only time that you're going to claim it under your inputs. You realize that, especially in this industry, you are mostly a service industry. Hauna input mingi. Hata kama unapikia watu, utapata ndio unapikia watu ugali, wananunua ugali na VAT, but wewe unga ukinunua, haukununua na VAT, ilikuwa exempt. So hauna input lakini uko na output. So for in areas where you can claim output, if it is security, if it is assets, if it is your supplies is gonna which are vatable, ensure that you are given a valid items invoice. I hope that is clear. Number two, we have the 6-month window period. Inputs can only be claimed within 6 months as for VAT purposes. For income tax, you are in a limit, but for VAT, the 6 months. After 6 months, you cannot claim that tax invoice. So you have to be very careful to ensure that you claim your inputs immediately or within 6 months of the supply of those, either the service or the goods which are vatable, for you to enable you to recover hizo inputs in your VAT returns. Make sure they are within 6 months. Then number three, which has been a very big gray area, expenditure must directly generate taxable hospitality revenue. Expenditure must inafaa ikue wholly and exclusively for business purposes. So you are the owner of the business. Nyumbani wewe ni mkulima, unanunua tractor, and then you claim it under your hotel. Only and exclusively for business. Because when KRA comes to disallowing your supplies, your inputs, they just ask, was it used wholly and exclusively for business? If you cannot prove that, then it is automatically disallowed, and you end up paying the VAT that you had claimed. So the input VAT requirements, number one, it has to be a valid tax invoice. There has to be proper item documentation. There has to be an evidence of supply. A receipt is not enough evidence. You have to show that the supply was actually made and a payment was issued. Kulikuwa na delivery note, kulikuwa na good received note. But ukiwa tuna invoice peke yake, then it can be, even if it was a valid business input, KRA might actually not accept it. So let's be very careful on that. Sorry. And there has to be evidence of payment that either the good or the service was supplied and you actually paid. Na kuna proof of payment. Without that, then it is a 50-50 chance that your input might be disallowed by KRA. Then we have proper supplier details, their PIN, their locations, and how they were paid. So proper supplier details. And we have clear business purpose. And lastly, I've got proper accounting records. As far as KRA is concerned, KRA defense rises and falls with the kind of documentation that you have, with the kind of records that you have. Without a record, then it is not submissible to KRA. Briefly, I'd like us to look at mixed supplies and input apportionment. Basically, this is what means if you are, let's say you're supplying, if your supplies are a mixture of both vatable and exempt, then you cannot claim, hauwezi claim input zote. You have to apportion as per your sales. So what you do, you calculate it based on your sales, whereby you divide your turnover that is taxable. You divide it by the total turnover. Let's say, for example, in a particular month, ulipata tender ya kusupply, let's say in a particular year, ulipata tender ya kusupply services. Let's say the defense forces who are exempt. So, but at the same time, ulitumia lori yako ya kuwapelekea vitu, si ndio? Ulitumia stima kuwapikia. Kama ni security, ulitumia the same security. But now unakuja huku, you claim the whole amount, those inputs. You're supposed to apportion. So this is the catch. If your taxable turnover is above 90, then you claim the whole amount. If it is less than 90, then you claim only a portion of the sales that were vatable. Whereby unachukua your taxable turnover, divide by the total turnover, then you multiply by the input tax. This means if your turnover was 3 million and your vatable turnover was 2 million, utachukua 2 million, divide by the total 3 million turnover, and then you multiply by the input. Let's say in the security, 100,000. So instead of claiming the whole 100,000, you're going to claim only a portion that was equitable to, that was proportional to the vatable amount. So they just, but in most cases, there are not so many circumstances because the exempt supplies are far in between. But if you are in that situation, we cannot assume, then that is what you're supposed to do. Then let's look at the tourism levy, the 2% base. So this is basically governed by the Tourism Act. This is 2% on the gross turnover remitted to the tourism fund by the 10th of each month. And we have seen how you calculate it. Unachukua the base, you add the service charge, and then you multiply by 2%. Not the gross, not plus VAT, it is excluding of VAT. So for accommodation, it is gross room charge excluding the VAT. For food and beverages, it is basically the gross sales of meals and drinks and regulated establishments, of course, excluding VAT. So something to note, KRA and the Tourism Fund share data. Unmatched turnover between VAT returns and tourism levy triggers an immediate joint inspection. So that means unaweza pata uko na joint audit ya KRA na Tourism Fund. By the time they are done with you, then utasema afadhali ufunge biashara, rudi ushago. To avoid that, compliance. And as we say, in every webinar that we have, the cost of evasion is always higher than the cost of compliance. Yes, compliance has a cost. You might have to look for a tax consultant. You might have to look for a more competent accountant. You might have to look for services such as the health check and more established audit firms. But failure to do that, it will cost you even more when it comes to compliance and when you are accused of evasion by KRA. So basically, this is just in the slide that we currently have. We have this is basically a calculation of how it is usually done. This is basically how it is calculated, whereby let's say a hotel issues an accommodation bill with a base room of 20,000 shillings. Yeah, so yeah, the question begs, how are you going to do your calculations? So basically what happens is for the tourism levy, so the question begs, should the 16% be calculated on the total including or excluding the VAT? So the first answer is it on the total amount including the tourism levy, strictly on the base room rate excluding the tourism levy and the service charge bill? Number 3, it is non-taxable. The answer is B. It is on the base room rate, excluding the tourism levy and the service charge. But in condition, the service charge is 100% distributed to the staff. I hope that is clear. So what exactly is the audit shield as far as this industry is concerned? Number one, we have continuous compliance mandate. Continuous inamaanisha items whereby all the data has been linked to the POS and it's being directly transferred to KRA. So KRA wako na real-time data as far as your sales are concerned. Then we have operation exposure areas. Wale wa walk-in cash sales, wale wa M-Pesa tills, wale wa bank payouts and corporate invoicings. It exposes us. You have to be very careful as those are concerned. And then we have the corporate tax rule. This is the income tax. Expenses deductions are disallowed for corporate tax purposes without a supporting items invoice. While we were filing for last year, I know most of you, your auditors asked you to scan your receipts that are non-items. To avoid those issues, to avoid recurrent of such kind of issues, moving forward, because KRA gave a directive and said that 2025 was the last year that there would be expense validation. So what means from easy returns the current year, there will be no validation. Watasema yenye kwa items, that is what is going to be allowed. So the question begs, how prepared are you? Especially for the hospitality industry whereby unapata local supplies. Mwenye nakusupplyia mboga, mwenye nakusupplyia ujamaa kwa butchery, mwenye nakuletea nyama na kuku, hakupatii teams, but because they're doing it cheaper, you feel like you are making more profit. But I know most of us are asking, what about zile vitu unanunua kwa soko? What about hivi vitu unanunua hapo kwa watu wa kawaida? Huyu jamaa anakusupplyia kuni, unataka tu wapi items ama anakuletea makaa? KRA is oblivious of the fact that the majority of the people in Kenya are in the informal sector, and they're using those of us who are currently compliant to lure those other people in. So I'll tell you this, no matter how cheap it is, if it cannot cover the cost of taxation, then it's not worth it. At the end of the day, you end up losing more than what you actually think you're saving. Will KRA relax it? Will it really relax the tough measures that they have that's in the law? We do not know. But is that a chance that we'd want to take? What if ikifika next year and then wakatae waseme hakuna, no claiming invoices that are not from items? What will be the effect to your tax liabilities? So let's endeavor to ensure that all our expenses are items compliant, apart from the few which have been exempted from VAT. Vitu kama salaries and wages, vitu kama imports, vitu kama air tickets and travels. Hizo vitu kama bank interest, hizo KRA hazina shida nazo. Vitu kama capital zenye zinaenda kwa capital allowance, they really don't have a problem. But this any other expense, it will cost you more. So as far as corporate tax is concerned, we have allowable business expenses. That is according to Section 15 of the Income Tax Act. Basically gives us about what is deductible and what is not deductible. Because in our industry, we find as things come against amenities, utilities, marketing. Those are allowable deductions. So let us actually look. Do not assume that every expense that you have is allowable for both VAT and income tax. Go back to the law and look at Section 15. Ask your accountant to actually confirm with the law what the law says, so that we do not end up assuming. We cannot continuously live on assumptions. It is very important to know exactly what you're required from law, because someone asks, what about complementary rooms? Sindio? Hizi complementary rooms zenye unapata hoteli inapatiana, how do you treat them? Either imepatiana kwa employees, ama it is for marketing purposes. Let's say there is an influencer who is in your town, and then you decide to accommodate them, and then they market the hotel, so you do not charge them. Will KRA ask for VAT on that same house. Ama there is a room where it is occupied but the employees wako analala, will it be recognized as revenue? Ama will it be deductible? You have really to know the dynamics about that. So for complementary rooms, it depends. Number one, if it belongs to employees, then it's supposed to be, it is chargeable under their own pay, depending on the kind of housing that they're given. If it is complementary rooms for marketing purposes, then it is allowed not to declare that amount, that as income, but at the same time, you cannot claim it as a cost while you're calculating your income tax. So these are some of the intrinsities that are in this sector. So you have to be really careful about the treatment of such. And you remember, as we said, we do not treat this as blankets. We do not treat them as just one whole transaction. They are usually transaction based. That is why you say there are no particular taxes for hospitality industry. Tumesema it depends on the kind of transaction. The kind of transaction determines the kind of treatment. I hope I'm making sense. I hope I am not talking alone. Yeah. So I like to go kwa chat box niangalie kama naweza jibu maswali moja ama mbili. Yes. Yeah, I like to look at the questions, but I can see most of the questions are being answered. So someone is asking, as a hospitality business, we regularly purchase fresh produce and other supplies, such as tomatoes, vegetables, fruits, meat, and other market items from small-scale vendors who may not be registered for e-teams and are unable to issue electronic invoices. What is the correct tax compliant procedure for recording and supporting these purchases? Purposes of VAT, income tax, and expense deductibility. I think I have mentioned about it. It is a very gray area and it's really affecting, especially this industry. Number one, if the person is actually willing to give you an e-teams invoice and they do not know how to do it, then the law provides us the option of doing reverse invoicing. The only catch is they actually have to confirm. They have to confirm that wamekubali transaction, because there's an OTP that will be sent for the invoice to be validated. Kuna OTP itatumwa kwa the person, kwa the owner. The only thing atakupatia ni ID yake. So utaenda uprocess, but it has to, the reverse invoicing will only be complete if the other person actually acknowledges by giving you back the OTP. But for those who are unwilling, as I have said, I know it is hard, but if the cost in price does not handle the tax implication, then it is not worth it. I really hope. So someone is asking if we'll post this on our YouTube channel. Yeah, definitely we post all our recordings in our YouTube channel. And if you want this recording sent to you, there's a link that has been provided by my co-host. Register hapo ndani, then this link will be sent directly to, this recording will be sent directly to you. And also utakuwa unapata alert on the subsequent trainings that we are going to have. So it's very important. Yeah, we will share the recording. Let me look for another question. Someone is asking for online booking platforms where when paying their commissions. So far, they are not issuing it in invoices. How do we handle this? Yeah, I will mention that in a few. But currently, in most, if you're booking, especially through corporate accounts, it is actually possible for the corporates to give you an invoice that is ETIPS compliant. Yes, yeah, so but also you have to know that in this industry, um, it involves a lot of fresh produce. Ni sawa. Na hizo fresh produce zote, most of them they are exempted from VAT. Hata ukienda ukizinunua from supermarket, ndio zitakuja na items receipt, but you cannot claim most of them under VAT. It will help claim under the income tax. Utapata you deal with a lot of inputs zenye ziko exempt, but whatever you're producing is vatable. So for that, usually it is advised that when you're doing your pricing, ensure that you actually accommodate VAT, because in reality, hauna input. You might end up eating a lot of your profitability while you are paying for VAT. Because utenda ununue unga, ununue mboga, ununue a lot of these inputs, ununue nyanya, ununue vitunguu, zote ziko exempt. But unakuja huku chakula yenye unapika, unauza hiyo pilau na VAT. And it's vatable. Ukikuja kwa input, there is no input, but there is output. So you have to be very careful also about pricing. It is not about revenue, it's about revenue that has factored in VAT. I hope we are clear on that. Tukisonga kidogo, we have capital allowances. For hotel buildings, basically utapata most of these calculations, they're done by your auditor, or rather your tax person who files your returns at the end of the year. As per the law, 50% is in the first year of use, and then the residual value is 25% per year on a straight line basis. For machineries and equipment, 50% the first year and 25% of the residual still on the residual value. And for ICT softwares, hizo huwa zinakuwa straight line basis for 25% for 4 years. For motor vehicles, hizo pia ni 25%. For furniture and fittings, that is also 25%. 10% on a straight line basis until ziishi. But utapata hizi most of these calculations zinafanywa na your tax person or your auditor, but that does not mean that you be ignorant of what they are doing. That should not mean that you should be ignorant of what at least when you look at the audited books, it's not about signing what you have been given. Also, at least go through it and ensure that the correct rates have been applied. I hope that is clear. Yeah, at least I ensure hizo rates zimekuwa applied well. Next, we have withholding taxes. This is usually a very major issue. as far as this industry is concerned, especially the agency fees, the marketing fees. We have contractual cleaning whereby una kampuni linakuja kufanyia cleaning. We have transport services. We have professional and legal fees, management and consultancy fees. So let us look at some of these withholding taxes. Number one, management and consultancy fees. That is usually 5% if they are a resident. But if the person consulting, if it's a non-resident, it's usually 20%, which is usually the final tax. But this 5% for the resident, it's your final tax. Inafaa I declare and then alipie balance your tax. Then you've got professional and legal fees. Professional legal fees, pia hiyo ni 5%, na 20% non-resident. So it is not about assuming that all fees paid huko nje ni commissions, but the question is, what kind of commission is it? Because tunaona consultancy and management ni 5%, professional ni 5%, ikikuja kwa agency inakuja 10%, ikikuja kwa contractual inakuja 3%. So it is not about it is not about an assumption of the kind of commission that is being paid, that ujue kama ni provided ni pesa inalipo professional ati yote imekuwa taxable. Hapana, inafaa ujue ni exactly which exact kind of nini inakuwa produced, inakuwa provided, which service, and then you decide on which rate that you're going to apply. And then number two, you have to know if it is being supplied by a resident person or a non-resident person. I hope we are making sense. So it does not stop at just withholding, because currently the law says that the withholding taxes are supposed to be remitted within 5 days after making the payment. Within 5 days, in a may remit the amounts that you have withheld to KRA. And you'll find that sometimes you remain with the withholding taxes, and then after you filed your returns, KRA itakuja ichukue hiyo marketing fees yote, ikuja ichukue hiyo the transport, ikuja ichukue the professional, the management fees, and then ina charge nini withholding. And then it asks you. There was a saving grace in the Finance Act ya 2025, whereby saizi wanasema if you can prove that the person whom you paid the full amount and you declare that income, then you're going to only pay 10% of the amount of withholding that you're supposed to withhold. So kama ni 5%, 10% of 5%. But then it's usually subject to proving that the person that you failed to withhold from actually declared the full amount. But to avoid a lot of issues with KRA, ensure that you withhold, because that money, ideally, you're supposed to pay, it is not your money. So why would you withhold someone's money and then you pay to remit it to KRA? It will only be a trigger. It will only be a trigger to KRA. It will only be a trigger to KRA. I really hope you are following. Sometimes I know it is a lot of information in a short period of time, but that is why we actually produce the recordings whereby you can gradually listen to it, and if there are any resultant queries, please reach out to our office. We will be more than ready to help answer some of the questions that you have. Yeah. You like us like us to look at people and payroll taxes. Easy taxes is now affect the people, your human resource. Hao watu wenye wanafanya kazi, like us to look at the taxes that affect. And after that, we shall briefly look at the triggers, and also I'll touch something on the emerging issues such as treatment of Airbnbs and rentals. There have been a lot of people who wameingia kwa hiyo space ya Airbnbs, but hata wajui kama inafaa walipe tourism levy because wako kwa hospitality industry. But you never know. You rather not pay because you do not know, or you know about it. Like I said, ukose kulipa juu haujui unafaa ulipe. So we have talked about service charge. So what actually happens on a monthly basis in this industry? The service charge is usually collected kama in form of tips, and then it is subject to pay. Wanachukua and then they add it back to your salary, and then it is taxed. From there, utalipa pay as you earn, utalipa affordable housing levy at 1.5%, and then employer upatia 1.5% yake. Ashama shift utalipa hiyo percentage yako. NSSF unalipa whatever you pay, the employer matches it pia. If there is fringe benefits, easily complimentary staff accommodation ama free employee meals. I like to talk about this. Kuna organizations zenye zinapatiana zinapeana meals basically because hauwezi fanya kazi kwa hoteli alafu inafika saa 7 mnaambia mwende mtafute lunch and then mrudi. That is basically impossible. So this is what this is your biggest defense. Number one, the law, as Section 15 Income Tax Act, allows large to staff, but it has a limit. It has a limit. If the value of the lunch exceeds 5,000 per employee in a given month, any excess should be added back to their pay and then taxed. Sorry, to their salaries and then taxed. Let's say calculate pesa yenye employee wako anakula in a monthly basis, because this forms part of the staff cost. Kama exceed, kama uko na 10 employees na salary na nini yako na budget yako ya employee lunch in a month ni 70,000. So that means kwa kila employee anakula kama 7,000 kwa mwezi. The limit for that is 5,000. Any amount excess should be added back to their salaries and then charged. Am I clear? So you have to have proper documentation on the cost and the number of employees, and ensure that for it to be allowable and for it to not have tax implications, it should be not more than 500. Any amount, 5,000, sorry. Any amount more than 5,000 in a month. These are benefits that are supposed to be charged pay. Number two, kuna wale wako na especially in the hospitality industry, hizi magari za kazi. We have seen circumstances whereby they are treated as car benefits, which are chargeable 2% of the value of the car on a monthly basis. You have to ensure that hiyo gari ya kazi, there has to be evidence that hiyo gari ya kazi manager huendi nayo nyumbani na huwa hatumii for private use. If you cannot, if you'll fail to prove that, then we'll find that in most cases, hizi gari ndogo ndogo, most of them zitatreatiwa kama employees car benefit, especially utapata labda insurance mwenyewe ndo anaenda kakata, ama charges zenye cost zenye inatumika hapo, yeye ndo anatumia, yeye ndo ana is the one who caters for it. So you have to ensure that such kind of technicalities do not give you an additional tax obligation as a company. So treatment of these benefits, employee benefits, tumesema accommodation inafaa una add back to kwa sorry, you're supposed to add it back to their salaries, because for those of us who know how to file, who anauliza housing, is it given by the employer or not? And then they ask for the value of it. So we have to be very careful about treatment of these benefits that are given to the staff. Ama inafika December, then you decide that no, because wamefanya kazi mzuri during December holiday, unawapatia bonus. Add that back to their salaries, because it's taxable. So it is not, sometimes we fail to do things not because we want to evade tax, but because we do not have that information. That is where we come in. We empower you with that information, so that ukiendelea kosa kulipa, you're doing it out of evasion, not out of ignorance. If I could briefly look at some of the KRA audit triggers. Number one, we have if there is a mismatch between your POS and your ITAX on your eTIMS revenues, then of course that will be a trigger. If there are high cash or M-Pesa volumes in organizations, of course, KRA will be very curious to know how you treat the cash. If there's a lot of easy complementary rooms, kama kuna high occupancy rates, na kuna revenue declaration mingi, then of course, you are inviting KRA for an audit. If there is no proper documentation for the service charge, or if there is a discrepancy between the service charge that has been collected from guests and how it has been distributed for payroll. Remember this, KRA has got all the information. Or of course, ushawapatia your revenues na VAT return zako. Usha file pay. And then wakuja kwa ground waangalie the variance between the pay declared, the tourism levy, and the service charge. It will give you problems. And then if there are a lot of direct bank deposits from foreign from foreign OTAs, these are booking sites such as the Airbnb and the booking.com. And then at the same time, you have omitted them from your VAT filings. So there's a lot of bank deposits zimetoka kwa booking.com from Airbnb, but sasa ukuja huku compare to what you have declared kwa VAT returns zako iko chini, that means there's an under declaration. So let us be very careful as far as those reconciliations are concerned to avoid issues with KRA. And then we have got hotel groups. This includes what come up in the Serena hotels, let's say JW Marriott, whereby kuna a lot of related party interactions. Either ni management inakuja kufanya kazi huku kidogo, ama kutakuwa na transfers of inter-hotel transfers. If there are loans, intercompany loans, if all these transactions are not at arm's length, then it gives a KRA, it is a very big trigger. And it has to be supported by a transfer pricing policy. This means that there has to be a policy documentation on intercompany loans. If it is management and brand licenses, there has to be that. Kama kuna reserves that is centralized, then there has to be a transfer policy document showing that. And there was a change in the Finance Act 2026 where it required all local companies to have their master files. Initially, ilikuwa na limit ya 95 $95 million for you to have your master file in your local company. But currently the threshold for 95 billion ilitolewa. So saizi ni all companies zenye ziko na their parent companies outside the country. They should have their master files. Yeah, I know it brings a lot of exposure, but the law is the law. And there are some laws whereby you might not think it's important until they come for you. So especially if there's a lot of related party interactions, these international hotel brands, these management chains, management chains kama kina KFC, you have to be very careful about the kind of transactions that you have with your foreign entities. And you have to ensure that you have your transfer pricing policy document with you, and it has to be updated on an yearly basis. So if you're in that industry, we are more than ready to help you develop one. Yeah, so do not get flat-footed by KRA. So these are the takeaways. Sorry. Tax compliance is a strategy currently, not a luxury. If you're not strategic on your tax compliance, then at the end of the day, you're going to lose more than what you actually bargained for. I know most of us are usually told that we give Caesar what belongs to Caesar. And there's usually a lot of emphasis on giving Caesar. But the second part, which says belonging to Caesar, is usually is not said more than enough times. The only way that you will give Caesar what belongs to him, not more, is you have got if you have proper documentation, if you have got a good compliance strategy, and if you have got systems that actually work, that will protect you from giving Caesar what does not belong to him. Because when you're being issued with penalties and interest, let's say, for example, that money does not belong to Caesar. That money belongs to you, but you're giving it to him either way because you actually failed to have a strategy, a tax compliance strategy, on ensuring that you give Caesar only what belongs to him. But if you are sufficiently philanthropic, then it's totally okay. But with this economy, I highly doubt. So to avoid those issues, ensure that you keep your records in a way that will ensure that Caesar gets only what belongs to him and no send more. And then we have automation is essential. Whether you like it or not, you have to automate your systems. Because through it, there's already visibility. Sasa we mwenye kama as an individual, you are still using manual spreadsheets. That is a disaster waiting to happen. You have to be very careful. And we can help with that. I'll tell you how. And then you have to have clear statutory separation. That is, maintain a strict segregation between VAT, tourism levy, and service charge basis. This will help you eliminate audit vulnerabilities. Then again, have proactive health checks. That means you should conduct regular internal tax reviews across all departments, from payroll to procurement to revenue platforms. Catching discrepancies early will enable you rectify your books and actually adjust them to show the true value of your business. And even when KRA comes knocking, you'll be more than ready to give them a cup of tea as they wait for the files that they're asking for. So this next we have a case study, and you see that in these most case studies, if it is not assessments basing on capital allowances ni VAT. Kama si VAT ni treatment ya the service charge. Sorry about that. So you have to be very careful. And as we say, all these cases, they rise and fall. They usually rise and fall basing on the kind of documentation that you have. If you fail to prepare your documents, then you are definitely preparing to fail horribly when it comes to tax audits. If I may look at one or two emerging issues, I'd like to talk about Airbnb and short-term rentals. We have seen that in the very recent past, Kenya has been moving fast towards bringing short-term rental accommodation and digital hospitality platforms further into the tourism levy framework. So basically, what the tourism ministry wants to do, it wants to extend the 2% to short-term rental operators and platforms. And they will do that through the Airbnb and the booking.com. It is not yet in the law, but that is one of the things that they're doing. But this will create a very important question. Who is responsible? Is it the property owner? Is it the property manager? Is it the digital platform, booking.com or Airbnb? Is it the booking intermediary, these agents who help you in that booking? So those are some of the questions that we'd wait and see to wonder how they're going to answer. Nani atabea this cost? Of course, at the end of the day, it's the person booking, but who will be responsible in submitting the 2% tourism levy? It is not there yet in the law, but it is something that it is basically cooking. So let's wait. We will wait and see. We will wait and see. We will wait and see. So these are my take-home points. Number one, claim hotel tax allowances. So structure development and fit outs to maximize first-year investment allowance, that is 50% under the income tax law, and it has to be properly documented. Number two, enforce e-teams for all vendors. Tumesema if the amount you're saving does not cover the cost of tax, then it's not worth it. If someone is selling to you something cheaper, if it does not cover the cost of tax, then wachana nayo. So it has to cover 30% income tax. It has to cover 16% VAT. If it does not cover both, then it's not worth it. Number three, exclude tourism levy from VAT base. So we have talked about that more than enough times, about calculation of VAT. We have seen a lot of people overpaying their VAT because include housing levy hapo ndani, tourism levy hapo ndani, include service charge hapo ndani. So you end up paying a lot of money to KRA. Then number four, process service charge through payroll to avoid penalties on untaxed payroll benefits. Ensure that you process this service charge through the payroll. And then ensure kuna reconciliation, a multi-system one, that cross-checks your point of sale, your M-Pesa, your e-teams, your tourism fund filing, and your banks to avoid mismatches before these KRA audits. Please ensure that. Please ensure that, because at the end of the day, you're the one who owns the business. You are the one who is going to bear the cost. I hope we're making sense. I really do. I really do hope that we are actually getting one or two things. I think I'll go back to the questions and then answer one or two questions. And then we see, yeah, one or two questions. Someone is asking, how do you treat fuel expenses when the company uses the director shareholders' vehicles, but there's no lease agreement between the company and the director? Will the fuel expense be disallowed? The answer is yes. The fuel cost is going to be definitely be disallowed. Itakuwa disallowed because number one, there is no agreement. Number two, the vehicle is registered not under the company's name. So why would the expenses for a vehicle that does not belong to the company be used to reduce taxes? So it is very important to ensure, number one, tell the director I register the vehicle in the company's name. Alternatively, you can actually charge transport services from the director, but then again, he has to do in his own personal income, in a file declare that income. You can treat it as an expense, as a transport expense, but at the same time, the director kwa return zake personal, inafaa declare income from transportation services. Because nowadays, there is an attachment between the directors and the company. Kitambo, they were being treated for tax purposes as two very different entities, but nowadays, when they realize that a lot of directors wakikuwa na issue na kampuni moja wanafungwa ingine, then they decided to strictly now the affairs of the director now becomes the affairs of the company by as far as taxes are concerned. So I think having a distinction is very important. So then we have, for a company that sells meat, which is VAT exempt and has met the VAT threshold, are they mandated to register for VAT? Not really, you're not mandated to register for VAT. You can register for VAT and actually classify your sales as exempt, but it's not compulsory. The law says expressly says those dealing with vatable goods. When VAT is not vatable, it is exempt. Someone is asking, please touch on Airbnbs. Are we required to pay rental income? Airbnbs, you do not pay MRI because they are not your houses. Airbnbs, you pay income tax. And if there are many, if you get a revenue of more than 5 million in a year, you pay VAT. There has been a lot of misconception whereby you end up paying MRI for houses that are not yours. If you have an Airbnb in a residential house, then you, as the owner of the BNB, unafaa ulipe income tax, which is, na kama uko nazo kadhaa zenye zinapita 5 million revenue in a year, is supposed to register for VAT and pay VAT on a monthly basis. Ni sawa? So for the BNBs, you declare the income tax, and then some of the expenses utadeduct hizo rent, hizo cleaning services, hizo stima nyo unalipa. Then if there is a profit, that is when you're going to pay the income tax on the same. But you do not aulipe MRI on Airbnbs. Or someone has asked, clarify on per diem. So for per diem, initially it was 2,000. If employees are given per diem when they are working outside their workstation, currently, initially ilikuwa 2,000, but size in 10,000. Any amounts above 10,000 in a day, as far as per diem is concerned, ni taxable. Inafai added back to their salaries and then in a taxable pay. But if it is below 10,000 in a particular day, then it is allowable. Yeah, it is allowable. It is allowable. Yeah, I can see the questions coming quick and fast. I can see that most of them have been duly answered. I can see that most of the questions are being answered. Yeah, someone has defined OTA for us, which is basically online, these travel agencies that are online. Let me look for another question. Let me look for another question. Someone is asking, our company has been appointed as a withholding tax agent for our purchases. Which suppliers and types of payment are we required to withhold tax from? For example, do we withhold on ordinary hotel purchases, such as food supplies and fresh produce, or only on specific categories such as professional and contractual services? When it comes to withholding taxes, especially the VAT withholding taxes, you withhold on your supplies, especially the supplies that you are paying by check. For cash purchases, it is most of the time it's very difficult because you cannot go to a supermarket then baada ya kufanya shopping ukaenda kulipa unasema sita kulipa 100,000 kulipa 98,000. So carriers usually most of the time has got really no issue on cash purchases, but when it comes to, but also it depends on the magnitude, because for fuel utapata in most circumstances tunafanya na order, it is paid on a weekly basis or on a monthly basis. For wholesale services is the same. Then for those you withhold, ikikuja kwa consultancy na management services, definitely you have to withhold them, but you only withhold vertical services. If you're withholding agent, mtu akawa amekuletea mboga na hiyo ina VAT, why would you withhold 2%? So number one, ensure that you know the nature of the supply, if it is vertible or not. If it is vertible, then withhold 2%. If it is not vertible, then unamlipa his full amount. Unless it is a professional service above 24,000 in a month, then you're supposed to withhold. I hope that is clear. I really do hope that is clear. As I conclude, I'll tell you this, that in this industry of ours, hospitality means making everyone comfortable, including at the taxman. If your clients are comfortable and the taxman is not comfortable, then kuna shida mahali. Kuna shida mahali. So ensure that everyone is comfortable, including the tax part. Keep proper records, pay the amount of taxes, correct amount of taxes. If you're not sure, reach out to us and we shall be able to direct you on how you can go around this. On the 28th of this month, we shall look at the most common KRA audit triggers, especially after we have finished the filing season. Dr. Regina will be speaking on the audit triggers which flag our accounts to or rather which expose our accounts to KRA audits. Please let us ensure that we join this webinar, and I know it's going to be very productive and very helpful. And then we have a taxation masterclass on the 9th to the 11th of September. That is a physical training. That will be running from exactly 8 a.m. to 5 p.m. I remember when we were holding the March masterclass, some of our students even were asking if we could start at 7:30 so that we have more than enough time. It is usually very engaging, and usually come with all your queries, come with all your worries and all your uncertainties as far as taxes are concerned. And we have a team of very able experts who are well conversant with the tax laws and the tax procedures, and we will help you in your tax issues and also giving you the proper tax education. The charges will be 50,000 for the physical masterclass, and the online training we run from the 14th to the 25th of September. That is basically from 7 p.m. to 9 p.m. on a daily basis. That is on online, which is 25,000. In the same breath, we'll have audit and bookkeeping masterclass. That will be November 4th to 6th November, and the online one will be from 9th to the 20th of November. The charges have been clarified hapo. So let us plan for this and come, and let's sit and have a conversation on matters tax. We also do tax health checks. So if you want to if you want to measure how compliant you are, if you want to measure how prepared you are for the taxman, we do health checks. We look through your books, through your systems. We do a thorough audit of how your procedures are done, and we tell you the kind of exposure that you have, and actually give you solutions on how to avoid those pitfalls. We also help refund tax refunds for those of us who are in a credit position, and we offer a lot of services. We handle career audits and career reviews. We do trainings, we do due diligence, we do transfer pricing, documentation and formulation of the policy, also internal tax audits. So please come engage with us for these services. We also offer audit services, very conversant with the current audit trends, and ensure that there is compliance with all the audit requirements as far as the international audit standards are concerned. So for all your audit services, reach out to us. Even for the businesses, we do bookkeeping on a monthly basis, and we also do internal audits. So please come and have a conversation with us. Reach out to us, and we are more than able to help you. Lastly, I'd like us to talk about, we have a system called My Accurate Books. My Accurate Books is a system that has been developed through RWK, or rather by RWK. This is after we have seen the gaps that are in the accounting system. This is after we have had a lot of interaction with our customers, especially the small and the medium-sized enterprises, and the kind of issues they have with bookkeeping. We have seen people close up their businesses because of poor documentation, and we not want this to happen. So we developed a program that helps businesses cover their needs. So I'd like to hand you over to one of our experts in the next 5 minutes or so to take us through the procedure of actually how this works. And at the end of the day, please ensure that you reach out to us and we'll be more than able to install the system and take you through this system. Otherwise, I'd like to thank you so much and I'll see you soon. I'm expecting you guys in the master class, and I know it's going to be very educative. Karibu sana, our IT person.
Hello, I'm David. So I will just need around 5 minutes so that I can take you through about our accounting software, which is my books, so that you can be able to have an understanding of our software that is my books, and how you can be able to manage the bookkeeping aspect of your business. So this is a product from UK Africa. They were able to come up with this particular product in so that they can be able to cover the clients that have issues with the bookkeeping aspect of their business. So the system is a web-based system, which is you can be able to use your computer, your mobile phone, your iPad. You can be able to log in from multiple departments, multiple devices. So this is the web version for the system. There is also the upper version of the system. So basically, it's a very simplified accounting software, which you can be able to navigate through as fast as possible. It has some key features. So I'll just go to the key features of the system so that we can just be able to look into the time that we have. So the key features of the system, there is the inventory management, whereby you can be able to keep track of the different products and also the different services you offer. You can be able to manage stocks, do stock transfers to different branches if you have multiple branches, also set reorder levels, and also you can be able to keep batches of different stocks so that you can be able to know which particular batch of items you are currently selling, so that you can always be able to track items by their batches. There is also the sales and POS, which is basically you can be able to generate quotations, invoices, credit notes, receipts from the system. So it becomes easier for you to manage the invoicing of your customers, managing their payments, managing the quotations, creating credit notes. So it becomes, and also if you have a particular question, you can drop it on the chat box and then I will be able to answer it in a moment. There is also the aspect of the purchases, whereby you can be able to have your different suppliers on the system so that you can be able to keep track of the different purchases from your suppliers. So you can always be able to record different purchases from your suppliers. You can be able to pull e-teams purchases from the e-teams portal from the suppliers. There is also the transaction whereby you can be able to generate transactions so that when it comes to reconciling your transaction, it becomes easier. There is also the expense management, which keeps track of the different categories of expenses within the organization. So you can be able to have a track of all the expenses that you incur in the business. And also you can be able to manage on the expenses so that you don't overstretch the business in terms of the expenditure. There is also the customers. So you can be able to have your customers on the system so that when it comes to generating customer statements, it becomes one click at a click so that you can have your customer statements. Again, advantage of having your customers in one place is you can always be able to do bulk SMSs using the system to customers in case they are running discounts or offers you are running, or a particular communication you want to pass to your customers. Also, having your customers, you can always be able to send their receipts and invoices either through SMS, WhatsApp, email. And there is also the accounting aspect whereby you can be able to generate all the accounting reports. So it has the accounting module whereby you can generate the cash flow, the trial balance, general ledgers, journal entries, and also the charts of accounts, and also the asset management. So you can be able to have all the samples of your accounting reports. Then there is the normal reports, that is the profit and loss reports, inventory sales reports, customer balances, collection data, and also creditors reports. So you can always be able to reach those reports from the system. So there is also the users and permission. So you can have different users on using the system. So you can be able to limit permission depending on the user. So if a particular user is not supposed to see a particular area, you can always be able to limit on the areas they can be able to visit, and they only allow where they are supposed to have a look into. And also there is branches. You can be able to have multiple branches in the system so that you can be able to track each branch as a business entity. And also when you need a report for all the branches, it becomes easier to combine all the reports for all the branches to see how the business is performing. So there is also the aspect of multi-company management whereby you can be able to run multiple companies using the system. So you don't have you can always be able to navigate, switch from one company to the other, do their invoicing, do their reports and all that without much hassle. So those are the key features of the system. There is a stock request, sales, quotation, purchase and payment methods. There is the accounting reports, that charts of account, journal of entries, general ledgers, share balance, cash flow, business reports. So you can always look into the different features of the system. So I'll just log into my account and then we can have a glimpse of a live account, how it looks like. So this is a live account. So, the moment you log in, you can always be able to have a dashboard of how the business is performing. You can be able to see the expenses, the purchases. So you can always be able to filter depending on you want a report for what period. If you want for the last 6 months, 8 months, 1 year. So you can always generate those reports. So you can be able to see the sales, the expenses, the purchases, and also what profit you are making, and also a graphical representation of the performance of the sales on the different months. There is also the debtors and creditors reports. So you can also be able to see how much is still outside with your customers and how much you owe your suppliers, and also a financial summary, and so the collections, and also the top selling products or services depending on the nature of your business. So the dashboard is just an eagle eye of what is happening in the business. So you can always have those particular reports. And then there is inventory, which you can be able to keep track of the different services you offer, products, either services, so that you can keep track on the stock levels of different items. If it's about stock transfer to different branches, you can always be able to set the order levels. So you can always be able to have a catalog of the different items you offer, what is in stock, what is out of stock, what are the stock levels. So you can always be able to have that. If it's about a raw material you are in manufacturing, you can always be able to see the different raw materials and also the quantities that are remaining. If it's on the services, again, you can be able to see the different services you are offering, either solar installation, all that services you can be able to go over. And also the imported items, these are the imported items from items purchases of when you pull it from your suppliers, you can be able to pull the items purchases, and then you can be able to see the items which you are able to import from the different purchases of your suppliers. You can also be able to do a stock transfer to different branches, so you can always be able to switch from one branch to the other branch and see what is happening. So if you have your multiple branches, it's all catered. You don't have to log out and log in into a different branch. You just switch to the other branch. Stock transfer, stock control, you can always be able to take stock using the system. Then when it comes to sales, there are different aspects that is making sales when creating credit notes, invoices, and also the receipts. So the invoices, you can be able to create also when I'm making a sale, you can create a items invoice and also an items invoice. So if it's an items invoice, you just switch off the items synchronizing, so that whenever you generate those receipts, you can always be able to see the items that you synchronize to items and the ones that you did not synchronize, so that you can be able to accommodate the two aspects of the system. If you want to declare some sales on items and the others you don't want to declare them on the items side. So when making a sale, you can always switch on and off. So when doing creating a receipt or an invoice, there is this sync to items on and off. So you can always turn it on and off depending on the sale you're making. Items invoice, you just click the different item you want to sell, create that, then select a particular customer. Maybe I can select this particular customer. Maybe they are paying right now, and I select a payment method I'm using, maybe an Equity bank account, and then I can be able to create an receipt. So the receipt will automatically synchronize to items if I were turn that item synchronizing on. If it is not an items invoice, it will not be go to the items side. So just give it a few seconds and then it will be able to synchronize and have all the QR codes for the items in just a minute. So when the receipt is created, I can just click view this one, the one which I had synced, and download in PDF so that we can look into it. So I'll just open it. So if you synchronize your invoice to the items, it will come with this particular outlook. So it will be able to show you the items that you have been able to sell, and then at the bottom it will be able to have the items KRA receipt information. So you don't have to go to the items to create a receipt. So you can always be able to do it using the system directly. That is on the preceding invoices. So you can be able to create quotation, credit notes, receive payments, deliveries, and also you can be able to set recurring invoices. So you can be able to have your customers on the system, so that if you want to do maybe a bulk SMS, you just click your customers, and then you can be able to synchronize them to items, or you can be able to send an SMS to them. Then there is transactions, which gives you an overview of the different the money in and money out of the business. So you can be able to see the different money in and money out of the business, and also the different payment method that were used. So in case you have a question, just drop it on the chat box. I'll be taking them in a moment. There is also the purchases. The purchases, you can be able to generate a debit notes, create your suppliers on the system, so that if they want a statement, you can always generate a statement. So on the sales, you can be able to record normal purchases from your suppliers, and also you can be able to pull items purchases from your suppliers. So if you link a supplier, you can always just link that particular purchase, and then it will automatically populate on your inventory. Then there is the expenses management, whereby you can be able to create different expenses. You can also be able to set recurring expenses in the system, so that whenever an expenses card is put in a particular category, so you can always be able to create the expenses, so that when you add an expense, you categorize that particular expense. There is also the accounting module, whereby you can be able to generate all the charts of account, the journal of entry, the asset management, the general ledger, the balance sheets, the trial balance, and also the cash flow. So these particular accounting reports will automatically be generated from the system. You don't have to input anything. It will automatically generate on the system. There is also the reports whereby you can be able to see the inventory reports, whereby you can be able to see the product, inventory product, inventory movement, sold product, return product. Can also generate the profit and loss commission in case your salespeople sell on commission basis. You can be able to set on what commission they are earn from a particular sale. So that whenever they sell a particular product, it will automatically calculate the commission they are supposed to get. There is also the customer reports whereby you can generate a data report, customer balances, and also the collection reports. There's also creditors reports, and also there is the sales report, either by sales overview and also sales by items. So you can be able to see the sales on each particular day, the payment method that the customers used, customer performance, product performance, and also a visualization of those two particular aspects of a customer and the product, and also a detailed report each particular receipt or invoice, what was in that particular invoice or receipt, and was the status of if it's paid or unpaid. And also you can be able to filter as if it's a receipt or an invoice. There is also the user management. Here is whereby you can be able to add different users into the system. So you can have multiple users using the same system, but with limited features depending on that particular user. So if it's a person who manages the store, you can be able to give them just the inventory area. If it's on the sales people, you give them sales, and then you can be able to limit whenever a receipt or an invoice is created, is only the admin who can maybe correct in case there is an issue. There is then the branches. You can be able to add multiple branches on the system so that you can always be able to switch from one branch to the other. There is also the aspect of a multi-business. So when you go to the business profile, if you have multiple companies, you can always create a new company under your account, and you can always be able to switch from one company to the other and see how they are performing or do the invoicing and all that. Then there is the billing. Billing is where you choose a package that you would want to start with. So we have two packages, but the items, the package that accommodates items is the gold package, which has an annual plan of 9,000. So the plan is 9,000, and so I can just switch to a business which is not integrated on items, so that I can show you the differences between the two packages. So we have two packages. There is the standard package and the gold package. The standard package is 5,500. The gold package is 9,000. So the key differences between the standard is and the gold is all what is standard is available on the gold, plus now the accounting module. The accounting module is only available on the gold package. The multi-business management is only available on the gold package. Items integration is only available on the gold package. And also the gold package has the ability to have more branches and also more users compared to the standard package. So those are some of the key differences of the system. So the system is a very simplified accounting software, which you can be able to run your business. And you just don't need too much accounting knowledge to be able to run this particular system. So you can be able to maneuver through. Then there is if it's on the items, if you let me just switch back to the account with the items. So if it's on the items, you want to see a sales summary of the invoices that you were able to synchronize to items, you will just be able to go to the items, and then you can just click a sales summary on the items, and then you can be able to have a report of the invoices that you were able to synchronize to the items portal. There is also the My Accurate Pay, which is a wallet that you can be able to use it to manage the petty cash of the business. So you can be able to set budgets on that particular on your petty cash, and then you can always be able to make payments to different suppliers, payments to cash flows, and all those expenses will automatically populate to your accurate books. And then there is also the payroll, which basically can be used to do to manage deduction, employee check-ins, or the aspect of the HR capabilities. So the payroll can be able to handle that. The Migrate Books, it's a comprehensive system that accommodates different features of the system. So that is basically the key features of the system. So I'll be able to take a few questions that you have shared on the chat box. So we can start. Yes, what I'm presenting is an accounting software. It's a bookkeeping software, which has a comprehensive accounting aspect and also integration with payroll and also petty cash management. So if in case you want to inquire about the system, you can call us on 0116 333 000. You can call us, you can chat us on WhatsApp. 0116 333 000. My co-admin, you can share the number on the messages. It is so the system you can be able to download on the mobile, on the computer, it's on the web app. Yes, George, it can be able to accommodate that. We have different tour operators using our system. So it can be able to accommodate these particular aspects of accommodation, transport, parking fee, and the extra activities. So in case there is a particular question, you can always be able to reach us on 0116 333 000. And then we can also do your virtual demo first. You can be able to system operates, and then we can also be able to help you on board and set up your account. No, our system doesn't have a one-off payment. It is based on subscription. So George, you can reach us on the number 0116, and then we can be able to do a virtual demo. Now you can be able to operate for your true company. So I'll welcome Timothy to just take a few minutes to show you about the aspect of which you can also be able to incorporate in your business and also manage about your employees.
So thank you everyone for joining. Thank you for also for your time. So this will be the last segment. This will be the last segment now on today's demo. Just a quick brief of our software. Please let's confirm maybe in the chat if my screen is visible. All right, all right, all right. Thank you. Thank you. So I'll be taking through briefly on payroll system and how it connects with my accurate books and my accurate pay. As we had my colleague earlier, just a moment, I can hear that my screen has frozen. Yeah, please confirm on the chat if you're able to see my screen and I am audible enough. Okay, so I've changed my audio. Please confirm again if I'm very audible and my screen is visible. So let me just share. It will take a minute. Sorry about that. I'm very audible, but screen not clear. Okay, let me use another screen. No. Okay, sorry for that. Technical. So I'll just quickly go through payroll as the last segment of the section. So as we had my colleague Timothy earlier, we must give back to Caesar at the end of the month, and it's for every company's goal to always pay their employees on time every single month, and also keep all the records, all the statutory records for filing and for future audits. So that's where my accurate payroll comes in. As I was explaining earlier, in our ecosystem for my accurate ERP, so we have the my accurate books. That was the accounting system that my colleague Joachim just showed us. So that's everything bookkeeping for any organization or company, in this case, in our tourism industry. We also have my accurate pay. So picture this as a wallet inside your company. This is supported by Chase Bank. So what Choice Bank? So what happens? Let's say, for example, you have employees, you have expenses that you want to carry out. With this wallet, you're able to make payments or have multiple levels in a department, so that, let's say, for example, you want to pay for something for in behalf of the company, I can request for that fund, then somebody else approves, then I can make that payment. So that supports that. And also it's just a basic wallet. An individual can also open it and use it as M-Pesa. So that is basically about my accurate pay. So for my accurate books, that's everything accounting as we have seen. And let me just do a quick demo on my accurate payroll. So we are all familiar about gross to net. So our system has support for that. And when you have this link, it's a web application 100% with employees self-service portal and application. So everything payroll, attendance, leave, daily pay can be managed with my accurate payroll. So let me just quickly log into an existing account so that we can have a look. Yes, so all our systems are very secure. And for this one, we require OTP that is sent to an original verified email. So let me just get my OTP. This will take a minute. There we go. Have the OTP ready. So this will be 38394. So the network is a bit. Let's connect. So sorry about that. So we had a small network glitch. So I think right now it's okay. All right, so apologies for that. So we had a small network issue, but right now we should be back. Let me just put in the OTP so that we check our payroll automation system. Yes, so there we go. Okay, so just since this is the last of the part of the demo, so I'll just quickly brush through. So in case of any question, please reach out and put it on the chat. So our payroll management system is very simple and compliant with all statutory deductions updated in real time. So ideally, in our system, you'll be able to onboard all your employees with three methods: bulk importing, and also importing an employee one by one. And even easier, the third option being generating a link where you put in the basic details for an employee, like the gross salary, start date, and their email. So once you do this, the employee gets emailed to complete their profile, and then you must approve first and review. Quickly, all the birthdays are here. Bulk updating once a year. I know most organizations, we do appraisals for our employees, so it's very easy. Can easily select some department and a minimum tenure, meaning I only want employees who have worked more than 3 months or 12 months. So with this template, you're able to edit and review every employee. And when you re-upload, the appraisal happens in terms of salaries, and the pay slips will include that, and the history for appraisal for that specific employee will be kept securely in the system. So we understand consultants, difference between a consultant and an employee. Consultant is that withholding tax. So when you add somebody as a consultant, the system will actually automatically calculate for us. So just jump straight to payroll. Before you run any payroll, we all have salary advances, which happens on employee self-service. There are commissions that we must also add. Apart from commissions, we have manual deductions. If we do have this, you must include them before you run a payroll. So let's say salary advance, you only require 50% of the gross maximum or 30%. So these are settings that you do it so that employee self-service application, they can apply for advance and get it. So straight to payroll runs. I'll just run one payroll to show how easy it is. By default, it will choose the current month. And we understand that salary data is always sensitive. So on the top right, we have an eye. If you are comfortable, you want to view all of the salaries for admin. So yes, we can see this is a test account. Once you have this ready, you can just proceed to run payroll. At this stage, you're able to see that the system will automatically calculate taxable pay, tax before relief, personal relief pay, and the final pay with the net pay, among other deductions. So when you continue to run, it will warn me because I had already run for August and say it will replace, which is okay for demo purposes. And here we are. Based on your organizational structure, if you have two people that needs to approve, we can set that up. But for this reason, I'm just a super admin, so I can proceed to approve. I mentioned my accurate pay earlier. With my accurate pay integrated with the payroll system, we are able to automatically disburse these salaries via our bank integrations or multiple bank integrations. So once you approve our payroll, all employees will receive their pay slips and the payment will be disbursed via PesaLink, be it M-Pesa, be it bank payments. And happens. This pay slip has already been generated. You can view it. Once you view it, you can see all the statutories, including pay and SSF, housing, help if it's applicable, and also data and amongst all the other deductions. I'll skip attendance, but briefly, we have QR-based attendance, which happens with the employee self-service application. Leave management is also here, where you can see all the balances and approve any leave for any employee, and also have an eagle's eye of all the leave days per employee. So for calendar, this is just a nice UI for statutory reminders and statutory dues, which also complemented by our compliance page, because every time you run payroll, you need to file pay. So once you have filed and you have the information, you can attach it here so that the reminder marks it as done. So for reports, if you already have MyRate books, accounting systems, for any questions, please kindly put it in the chat. I will answer at the end. So for the chat, for the reports, we have just a quick overview. All statutory deductions are here. You can just literally choose the month and download as zip. Then you proceed to file in the iTax portal and also in NSSF portal. We have them ready. The system will automatically calculate using the latest statutories and standard by our law. So under settings, what most people will ask, if you prefer to do manual statutory deductions, or maybe you just want a pay that currently, which is not advised, you can have a one-time setup where you disable that. Salary advance setting of employee self-service app you can determine maximum number of times an employee can request and maximum number of months. If you, let's say, for example, you see 2 months, somebody has an advance of 20,000. In the next payslip, they will be deducted 10,000, and the following, the remaining 10,000. So these are the settings that you have the power to dictate or to set here. So apart from that setting, we do have the main page where you can set your logo. This will go to the pay slips. You can also set your latitude, longitude, location, so that if you're using attendance or attendance-based payroll, we also have it. You can just quickly have an oversight of it, and it's actually very, very simple to use. Leave management is also part of our accurate payroll HR system, so you can approve and view all of them all in one place. And because of time, I will just review quickly. Please, if there's any questions, please put it in the chat. You'll be able to answer just as soon as you complete the demo. So for employees, let me just have a quick view for employees view, which is actually an app. But you have clocking, checking, sleeps, in forms, here, getting a leave, and also requesting for an advance. So this covers 360. If you enable my accurate wallet or my accurate pay, these ones will be very seamless as long as you top up on the wallet. You can do this seamlessly. Up to here, I would like to end my demo and answer any questions in the chat. And please remember on the feedback form, you can always, on the number that my colleague shared, my co-host shared on the chat, which is 0116333000. And the link for registration, can always register and follow up for a demo. So I can see a question, maybe my colleague also answered for the packages presented. Does it mean there's no one-off payments? So this is a subscription-based system, and another advantage is that you get multiple or even monthly updates and more features, and also your own customization can happen here, and we manage everything in the cloud. So it's a very fair amount, and that was annual, and there's also monthly subscription. How can I get my accurate? Okay, please click the link where it's online. So the system is online, but please click and register for a demo so that you can take you through. So for my accurate books, it's available on both mobile and web application. My accurate pay as well, get it on the Play Store. My accurate payroll is on the web as well with a self-service mobile application for employees. So I'd like to welcome any final comments, questions in the chat as we close. And I want to thank each and every one of us for joining and agreeing to see our demo. So is the gold package incorporated with the payroll package? So about pricing and everything, it's very custom per organization. So the payroll is on the side, but please book a demo so that you can go through all the products, and then we see the best pricing that can work. But according to value for money and competition, so we offer the best and the most affordable solution, which is actually without compromising the look, the feel, and also the features. So thank you so much, Anthony, for the question. Thank you, Kelvin. Hopefully, we'll be having a demo with you later or any day of your choice. Please pick the contacts from the chat. So I'll just welcome final comments or questions in the chat as we close. Thank you for the hands up. Thank you for the thumbs up. Thank you, everyone. And up to there. And can you do payroll care? Yes. So filing at the moment, Jared does not do automatic filing. However, when you go to reports, so the calculation, the system will automatically do all the calculations for each payroll department according to the settings that you have. So on statutories, all of them, like for example, KRA, it's easily to download, and then you just go and file. You file it in the iTax portal. But hopefully by end of the year, the government is really improving their systems and online availability. So we'll be able to just run payroll here, and the system will automatically file for you. So it will just be a matter of going to confirm that everything is okay from your iTax. And also for remittance, our next version will also do automatic remittance for all the statutories. So please take the number, book a day that you are available. We are very happy to have a free demo end-to-end for any of our software solutions, which includes My Accurate Book, which is the accounting software, My Accurate Pay, which is the wallet and payment solution, and My Accurate Payroll, which is the payroll and HR. So thank you so much, Mbere, for the question. And with that, I want to wish each and everyone a blessed weekend ahead. Thank you so much for joining. Be sure to join in the chat. We have that WhatsApp group link. Please join for future webinars and demos. So thank you so much, everyone. Have a blessed weekend ahead.